Hey, this is Demitri with the Demitri Team, and I want to talk to you a little bit about providing a mortgage, whether it's a first or a second on your house, meaning that you are going to do seller financing. I talked a little bit about this in my video about is your loan assumable, but in this case, I want to talk about you actually being the bank, and why would you want to consider doing that? Part of that is that there is a potential savings in taxes, capital gain cost, depending on how much gain that you have in the house, how long you've owned it. And the other piece of that is being able to provide passive income, meaning that, yeah, you could get a big lump sum. If you don't need that lump sum, what if you just need payments that come, monthly? I need an income part. So if you maybe set off tax costs that you would have, and now you've got income coming in, and you could do it over a period of time. So it also, by having those terms, could make it easier or more palatable for somebody to not only get into your home, but also pay a premium for your house because they can get into your home. So for instance, if they went and got a loan right now and they paid 7.5%, well, that 7.5% is going to a bank. Wouldn't it be great if you got more money for your house? Let's say that you got 20, 30, 40,000 extra for your house, but you only charge 5%. So their net payment is less, but your gain is a lot more. So you ultimately make more as opposed to the bank, even though you charge less interest rate. Ultimately, you're making more. Their monthly cost is lower than if they went to the bank, and you would just have to figure that out. Obviously, I'm not a financial expert here. I've done a bunch of these myself, and that's why I know it's worth exploring. But you're going to need to go talk to your tax professional, your accountant, and say, hey, if I were to do this, what is the benefit, and more importantly, what's the savings tax-wise, financially? And when you provide a loan, you don't have to do it forever. It's not like you got to be a 30-year mortgage sort of deal. It's like, man, I don't want to do 30 years. You could do a 5, a 10. You could do a 2-year. You could have what's called a balloon payment. You could make it interest only. There's a whole lot of options that you have in providing financing on a house that would make it beneficial to both parties, the seller and the buyer. All right, well, if you got more questions, I'd love to talk to you about that, get you connected. We obviously have several tax professionals that we could put you right in touch with that would answer that questions, get you on the right track, and get that going. I look forward to working with you, and I hope this was beneficial. Have a terrific day.